If you've ever bought crypto right before the market crashed, or sold right before it exploded, this video is for you. Before we go any further, do one thing for me. Subscribe to the channel, not because of hype, but because what you're about to learn is foundational. This is the kind of knowledge that stays useful for years. Now, quick disclaimer before we start. This content is for educational purposes only and does not constitute financial or legal advice. Alright, let's get into it. The crypto market doesn't move randomly, it moves in cycles. And once you understand those cycles, you start seeing patterns everywhere. In charts, in news, in people's behavior. Here's the uncomfortable truth. Most people don't lose money because they're bad at trading. They lose money because they enter at the wrong phase of the cycle. The cycle always starts quietly. No hype, no excitement, no YouTube thumbnails screaming 100x. This is the accumulation phase. Price moves sideways, volume is low, everyone is bored, and boredom is dangerous because boredom makes people leave. At this stage, crypto is dead according to social media. Friends stop asking about Bitcoin. News outlets stop covering it. But that silence is not weakness. It's preparation. This is when long-term players slowly build positions. Not all at once. Patiently. Without emotion. Then something changes. Price starts to move up. Not aggressively, not vertically. Just enough to make people uncomfortable. This is where confusion lives. People don't know whether to trust the move. Some say it's a fake breakout. Others say it's too late. And this is exactly why this phase works. Because markets don't reward certainty. They reward those who act while others hesitate. As price continues to rise, volume increases. More people pay attention. Media slowly comes back. This is early expansion. And here's the key mistake. Most people still don't enter here. They wait for confirmation. They wait for headlines. They wait for permission. But by the time confirmation arrives, the cycle is already changing. Now let me ask you something. Have you noticed that every bull run feels obvious only after it happens? That's not an accident. The crypto market is designed to be psychologically uncomfortable. If it felt safe, everyone would win. And markets don't work that way. As expansion continues, price accelerates. Pullbacks get bought aggressively. Confidence turns into excitement. This is where narratives are born. Suddenly, it's not just about price. It's about the future. It's about new paradigms. It's about why this time is different. And this is where emotion takes control. People stop asking, where am I in the cycle? They start asking, how high can this go? That question alone should worry you, because when upside feels unlimited, risk is usually highest. If this is already making sense to you, leave a like on the video. It tells me you want more content like this. Now here's something most people don't realize. The most dangerous part of the cycle is not the crash, it's what comes before it. And that's exactly what we'll break down next. For now, remember this. Markets don't punish ignorance, they punish overconfidence. At a certain point in every cycle, something subtle but dangerous happens. Confidence becomes certainty. People stop asking questions and start making statements. This time is different. It can't go down anymore. You're stupid if you're not in. This is late expansion. Price is moving fast. Corrections are shallow. Every dip feels like a gift. And here's the trap. Late expansion feels exactly like intelligence. You feel smart. Your portfolio is green. Everyone agrees with you. That's usually the moment the market starts distributing risk without telling you. Smart money doesn't sell in panic. It sells into strength. While retail is buying breakouts, long-term players are slowly reducing exposure, not exiting all at once, just enough to lock profits. This phase is loud. Social media is full of screenshots. Influencers multiply overnight. Predictions get crazier by the day. And the most dangerous sentence appears, I'll sell later. Later almost never comes. Because what follows distribution is not an immediate crash, it's confusion. Price starts to stall, breakouts fail, volatility increases. This is where denial lives. People don't accept that the cycle is turning. They explain every drop as manipulation. They zoom out selectively. Then comes the breakdown. Support levels fail. Bounce attempts get weaker. Volume spikes on red candles. This is panic. But panic is not just fear. It's realization. People realize they bought the story, not the cycle. Selling now feels stupid. Holding feels painful. Doing nothing feels impossible. And this is where most losses are locked in. Not at the top, not at the bottom. In the middle, during emotional paralysis. Eventually, the market enters capitulation. This is the phase no one wants to watch. Price drops fast. News turns negative. Projects disappear. And here's the irony. This is where opportunity slowly returns. Not immediately, not dramatically, quietly. Volatility decreases. Selling pressure weakens. Price starts moving sideways again. And just like that, we're back where the cycle began. Accumulation. Same structure, same emotions, different people. The cycle doesn't change. Participants do. If you remember only one thing from this entire video, remember this. The market rewards those who know where they are, not those who predict what will happen. You don't need to catch tops. You don't need to call bottoms. You need context. Cycles give you context. And once you see them, you can't unsee them. If this video helped you understand the market on a deeper level, subscribe to the channel and comment below where you think we are in the current cycle. Not for predictions, for awareness. Because awareness is the real edge.